There are 10 ways that as a beginner in the stock market, you are getting screwed. Today, I'm going to share with you guys what those 10 ways are and how you can avoid them. I cannot wait to share this with you guys today. Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about 10 ways on how beginners in the stock market get screwed over, guys. Now, the purpose of today's video is if you are a beginner in the stock market, you're thinking about getting in the stock market, today's video is not to necessarily scare you away from the stock market, because that's the exact opposite of what I want to do. But I have a purpose because thousands of people every single week who are beginners in the stock market come across my channel. I have a purpose that I have to get out there on some ways that you can literally get screwed out there or some disadvantages. So then at least as a beginner in the stock market, you understand what those ways are and to hopefully avoid these ways, guys, because I can guarantee you almost every beginner in the stock market gets screwed by at least a few of these, if not all 10, unfortunately, guys. So I just want to let you know about them, and then hopefully you can try to avoid them the best you can, or at least you understand they're out there and it's a disadvantage to you as a beginner in the stock market, guys. So that's the purpose of today's video. I hope you guys love it. Hit a thumbs up if you do, and let's get into this, guys. So number one way beginners in the stock market get screwed over are trading commissions. Generally speaking, beginners in the stock market don't have a lot of money. They're investing $500, $1,000, $2,000 maybe. So it's not a big amount of money. I mean, I get comments from you guys all the time, oh, I got $300 to invest. What should I buy? And, I'm not going to tell you what to buy and what not to buy. So I don't even really answer those, but I see a lot of comments, about a small amount of money. And that's fine. I started with a small amount of money. My first investment was I think $287 or $387 or something. It was super small investment. My second investment ever was for $500. So I was investing super small amounts at the beginning of my investing career. And so I understand that trading commissions can eat up a lot of that. The good news is for you guys, most companies nowadays charge about $7.95 for a trading commission. Some charge a little less than that, some charge a little more than that, but it's right around there. When I started investing, the trading commission for each time you bought or sold was $19.95. So I had to make at least a couple percent back on the stock just to break even because it was $19.95. And when you're buying only $500 worth of shares or $400 worth of shares, that's $40 in commissions right there. So I had to make a great gain on that stock just to break even, and then I had to get even a bigger gain to even go above that. So trading commissions absolutely do screw over beginners in the stock market because generally speaking, they don't have as much money to invest. Now, there is an app that I have not looked into yet, so I don't want to speak too much on this app, but people say it's called Robinhood. So you may want to check into this Robinhood app. From my understanding, I don't think they have a lot of support, so it's not like you can call them up at 3 in the morning and, talk about a trading position or whatnot like you can with some of the other services, but I'm not even sure. Maybe you can do that. I don't think so, because I don't want to speak too much on it, but I did hear about that, and I heard that they charge no fee for trading in and out of a stock. So you guys may want to check out that Robinhood app. Number two way beginners in the stock market get screwed is you get bullied by the investment community. You have so many people that come at you and say, you can't do better than the market. You can't beat the market. You need to have a professional manage your money. You can't do it. You're not smart enough. You didn't go to finance school. Blah, blah, blah. You're going to have a lot of people pushing you down, telling you you can't do it. The reason being, one reason is a lot of people are employed by basically managing other people's money. Personal finance people and those type of people, they need people's money to manage. So they don't want people to go out and do it themselves because guess what? That eliminates a potential customer away from them, guys. So you're going to have a lot of those people pushing you down. Then you're also going to have a lot of people pushing you down who I don't want to say are haters, but maybe they just got stuck in a bad position. Maybe they tried the stock market or they knew someone that tried the stock market and they got screwed really bad right off the bat. Like they invested in a stock that was maybe a hot stock and then that stock just dropped like a rock and they lost a whole bunch of money. And so they had a huge bad taste in their mouth and they're like, this is a scam. I lost 50% of my money or 30% of my money in 2 weeks. This stock market is a scam or whatever. And so that's why I hope that whenever a beginner's investing in the stock market, a stock doesn't go up too much or doesn't go down too much because it creates an unrealistic view of the market. If a stock goes down a ton, they think it's a scam and they need to get out of this market. If it goes up a ton, they think this is the easiest way ever to make money in history and they need to throw all their money at it right away. So I actually hope that people's stocks stay pretty even when they're in that beginner stage in the market. So absolutely, you're going to get bullied by the investment community. You're going to get told you can't do things. I mean, it's one of the only industries that's like that. I mean, imagine being going to freshman football practice as a freshman in high school, and the coach sits you down and says, "Hey, you're never going to be a starter on varsity. It's not going to happen." That's what it's like as an investor in the beginner stage of the stock market. You got a lot of people pushing you down. So just be prepared for that, guys. Number 3 way beginners in the stock market get screwed is you have a lack of overall knowledge. You have a lack of overall knowledge on what to pay attention to, what to look into in a company. Should you what's more important? This on the income statement or this on the income statement? What's more important, this on the balance sheet or this on the balance sheet? Do you even know to look into income statements and balance sheets? Do you even know to look into annual reports? Do you even know what the important things to look at? Do you even know what a gross margin is? So your lack of overall knowledge is definitely puts you at a disadvantage versus the majority of people in the market, because the majority of people in the market are going to be moderate investors or super high level advanced investors, professional level pretty much. So you're competing with those guys and gals, and you're just going to have a lack of overall knowledge. I mean, I'm still learning stuff, and I'm 8, 9 years old. I still learn stuff every once in a while. It's pretty few and far between, but I do still learn stuff, guys. I was still in a huge learning stage for over a year. Over a year it took me to really get a grasp of what was going on. And throughout the years, I've still learned stuff every single year, guys. So it's an ongoing learning process. And when you're a beginner, you have a lack of knowledge, and it's definitely a disadvantage, guys. So it's another way you kind of get screwed over. 4. This is a big one. A lot of times, beginners in the stock market, they get sucked into the stock market, and I don't want sucked in kind of sounds like a bad term, but you get interested in the stock market when it's doing phenomenal, when the stock market is breaking records because it's on the newspapers and on the publications and all this and on websites, and you see, oh man, the stock market, it's at record highs. Oh, look at that, it just broke another record high. It looks like it's so easy to make money. So that's when a lot of beginners in the stock market come in, and that's one of the reasons this channel's doing so good, and the way the channel's growth has been so outstanding, because a lot of people see where the stock market's at right now, and it interests beginners, and they come to my channel and whatnot, and it helps it grow. So the problem with that is sometimes when the stock market's at record highs and whatnot, it's not the best time to get in. Now, I don't want to I'm a little scared to even say that, because obviously the stock market right now is at what? Record highs. That doesn't mean it's a bad time to invest. It's just something to pay attention to, that beginners in the stock market a lot of times get pushed in when the stock market is at those all-time highs or near all-time highs, guys. So it's something to just pay attention to and look out for, and don't think just because it's at an all-time high right now that it's going to keep going all-time highs for the next couple years or whatever. Sometimes you have some bad periods in there, so it's very important to understand that. Number 5 way beginners in the stock market get screwed is you get pushed away or told, don't mess with the stock market when the stock market is doing bad, which is absolutely the opposite thing of what you want to do. I got into the stock market big time around 2009. That's when I really started investing in the stock market. I started looking into it a bit in 2008, started actually investing in 2009. 2009, the market was a disaster. If you weren't around in 2009 to know what the stock market was doing, just go back and look at a 2008 to 2010 chart, and you will get to see how ugly the stock market was in 2009, guys. It was disgusting. But it was the best time you could ever get involved with investing. And I'm blessed that that happened to be the time I was getting in. But, I had everybody telling me, don't mess with the stock market. That thing's a mess. You're crazy to invest in the stock market. You must be insane. The stock market's crashing. Don't get in now. I'm glad I started getting in. I'm glad I was interested in getting in, guys, because that's the best time to get in when everything looks horrible and the stock market's at all-time lows. And remember, the stock market hit 6,800, the Dow Jones, 6,800. And now 8 years later, we're at what? We're approaching 21,000 on the Dow. So that's a ridiculous gain, guys. So just be prepared for that. If you are getting involved when the stock market's in a crash type mode, or we're in a recession, sometimes what's the best time you could ever invest, guys? And there's going to be a lot of people telling you you're crazy for doing it. I guarantee you, if I started this channel in 2009, the growth would have been horrible. And that's assuming YouTube was as built out back then as it is today, because no one was interested in learning about the stock market at that time. Everybody was so freaking scared. They were like, "Ah!" So that's sick. That's number 5, guys. Number 6, beginners in the stock market get screwed because they listen too much to others in retrospect to their stock they're interested in. So they pay too much attention to what the guy on TV says. Oh, that guy, he said my stock's a bad stock, or he said this stock's a good stock, I need to buy that. Or they listen to me and they say, oh, Jeremy, he said he wouldn't buy that stock personally, so that means I shouldn't buy that stock. No, maybe just because a stock's not for me doesn't mean it's not going to go up a ton. It might be a good stock for you. It might just be outside of my circle of competence. It might be in your circle of competence. Maybe you have an insight on that stock that I don't have. So maybe that stock's a great stock to be in. But the problem is, beginners in the stock market, they're too focused on what a person on TV says, what the person writing the article says, what the guy on YouTube, Jeremy, says. They're too focused on that rather than focus on themselves and learning about that stock and making their own judgment instead of making a judgment based upon what someone else says, guys. So that's another way beginners in the stock market get screwed over a lot of times, guys. Number 7, beginners in the stock market many times, guys, are confused about which strategy to use. So there's tons of different strategies, right? You could be a day trader, you could be a short-term trader, you could be a long-term trader, you could be a Warren Buffett type of forever investor, you could be a modern long-term investor like I am. There's a million different strategies, right? Beginner in the stock market, you're a beginner. So you don't really know what strategy you want to do. And so sometimes you don't stick with the same strategy and you start messing around with this strategy and that strategy and this strategy, and you end up screwing yourself over because you're trying way too much stuff. Whereas if you just focused on one and learned that one very well and made sure that one was good, then you would be okay. So beginners get screwed because they try all these different strategies, and a lot of times they end up losing money and they don't really learn any of them very well. They just become like a jack of all trades, master of none type situation, guys. So focus on a strategy that you find yourself. And sometimes you do have to test a little bit to find what strategy you actually want to do, but try to do it with smaller amounts of money than huge amounts of money, because you might just lose a ton of money, guys. Number 8. Beginners in the stock market get scared really easily. They get scared really easily. A stock could go down 3%, 5%, and they're like, oh my gosh, what am I going to do? My stock went down this much. Oh my gosh, it's at the end times. They see a negative article posted about their stock. They're like, oh my gosh, so-and-so says this is the end times for my stock. They get scared so easily. Oh, the macroeconomics, the unemployment number wasn't as good. Oh my gosh, we're going to go into recession. They're really easy to scare beginners in the stock market. They get scared very easily. That's just the way it works, guys. So understand that if you want to be a beginner in the stock market, you need to learn to control your emotions and not get scared very easily. People like myself that have been in the market 8-9 years, seen a horrible recession, seen bull markets, all this kind of stuff, it's very hard to scare me. I'm just looking at facts, and then I'm making judgments based upon facts. I'm not thinking with emotion like, oh my gosh, the guy on TV, he just said we're going into recession in the next 10 months or whatever. No, I don't think like that. I'm thinking, okay, what are the facts I'm looking at? What are the realistic probabilities this happens versus this happens? And then go from there, guys. So beginners in the stock market, you get screwed because you get scared very easily, and then you end up selling stocks before you should sell stocks and not buying stocks when you should be buying stocks, and it's just ugly, guys. So number 9 way beginners in the stock market get screwed is not understanding the different ways to make money in the market. When you're a beginner in the stock market, and this is fine, but when you're a beginner in the stock market, you really only understand to buy shares in a stock, and then at some point you're going to sell those shares, and that's all you understand. And that's actually fine. I have no problem with that. That's all I understood for probably 2-3 years into investing. That's fine. That's probably the easiest, simplest way to do it. You buy shares or you sell shares. But at the same time, you're missing out on a lot of potential gains or getting set up for a lot bigger losses if you don't know how to hedge positions, if you don't know how to play short-term options, long-term options, those kinds of things. So that is something to understand there, guys. When you're a beginner in the stock market, it's really hard to learn all the different strategies I mean, you got to learn the long-term strategy. You got to learn, how to go long the stock. You got to know, this strategy, that strategy, short selling, short-term options, long-term options, how to hedge a position, all these types of things, guys. It takes a while to really learn that type of stuff and really fundamentally understand it. I didn't get involved with options, for instance, till I was in the market for nearly 5 years. I was in the market for nearly 5 years until I really fully understood options, guys, and started actually messing with options. So understand that. Understand that you're not going to understand all the positions, and there's really nothing wrong with it. It's just you're maybe setting yourself up for a little bigger losses and maybe not as big gains as you can get if you understood all the ways of playing it, guys. And number 10, and the last one coming up here, guys, in the 10 ways beginners get screwed in the stock market, is getting caught up in TV stocks. TV stocks, TV hype stocks. What do I mean by that? So beginners in the stock market, I watched CNBC for years and Bloomberg and a lot of those channels. Well, the problem is a lot of those channels, they talk about the same stocks, it seems like, almost every day. And they mention a lot of stocks, and I highly recommend you guys watch those channels if you need to just hear like stock names, and you need to because you can watch for 3-4 hours and you're going to hear a massive amount of stock names thrown at you to look into and whatnot. But the problem is a lot of those channels, they focus around a few stocks, right? And then those are like the TV hype stocks, I call them. They're going to talk about Apple a lot. Like right now, for instance, within the past year or two, they talk about Apple a lot. They talk about Netflix a lot. They talk about Tesla a lot. They talk about Fitbit a lot. They used to talk about GoPro a lot when it was way high, and they used to talk about GoPro all the time. And now that it's near record lows, they hardly ever talk about it anymore because it's not a TV hype stock anymore. But those are the type of stocks they always talk about. I'm trying to think of Chipotle. They talk about that's a stock that's always in the news. Amazon. I don't think I mentioned that one yet. Amazon is a stock they talk about. Google quite a bit. So those are like TV hype stocks, I call them. And some of them are very good investments, but sometimes they're really bad investments just because it's a stock that maybe IPO'd recently and it's gone up super high, and they just want to talk about it and talk about it and talk about it and talk about it. Snapchat is going to be a perfect example of a TV hype stock, and maybe that stock's going to do great. Maybe it's going to do horrible. We don't know. But I guarantee you that's going to be a TV hype stock, and that's going to be talked about every single day, probably multiple times per day for like the first year of its being listed as a public company, guys. So be prepared for those TV hype stocks. Don't get caught up in them unless that TV hype stock is actually a good investment. If it's actually a good investment, invest in it. If it's just something that's way overvalued and it's an IPO or something, maybe stay away from it, guys. So these are the 10 ways that stock markets get screwed, beginners in the stock market get screwed. I hope this didn't scare you guys away if you are a beginner in the stock market. I need to do my part in educating you guys on some of the potential ways you can get screwed out there, guys. So leave me a comment if you have any questions on this. Leave a thumbs up if you enjoyed this video today, guys. If you just came across this and you're not subscribed yet, you may want to. We talk personal finance on the channel. We talk entrepreneurship. I'm a business owner. Give away a lot of my business tips, and we talk the stock market the most of anything. Thank you for watching, guys, and have a great day.